Hello everyone and welcome back to my channel. In this video I'm going to show you how to select the perfect entry model for your trading strategy. As you all know, there are numerous patterns to consider when entering a trade. For instance, if you follow the ICT trading approach, you might enter based on a fair value gap or an OTE level, a breaker block, an inverted fair value gap and more. However, the key question is which one of these options can provide the best risk-to-reward ratio while minimizing the chance of missing out on profitable trades. So we are in search of that specific entry model that strikes a balance between generating profits and not overlooking potential market movements. And throughout this video, we will work together to uncover this optimal approach. So if you are interested in this, I encourage you to stay tuned until the very end of this video, and don't forget to show your support by hitting the like button and subscribing to the channel so you won't miss any upcoming content. And let's get started. And if you guys are searching for a reliable and trusted funding firm, then look no further than Crypto Fund Trader, a special pro firm with immense potentials. Crypto Fund Trader offers a wide variety of asset classes for trading, including crypto with the tightest spreads in the industry. You can also explore seamless trading options with Forex, stocks, indices, and commodities, all at a competitive spreads. Unlike other firms, Crypto Fund Trader believes in giving traders the freedom to succeed on their own terms. Experience challenges with no time limits, allowing you to focus on reaching your goals stress-free. To get funded, all you have to do is to pass phase 1 by achieving 8% profit and phase 2 with just a 4% profit target. You can choose your preferred platform, either the famous MT5 or their own innovative trading platform. Both options provide cutting-edge tools and a user-friendly experience for seamless execution. What sets Crypto Fund Trader apart is its track record of success. Hundreds of funded traders have not only thrived but also received their well-deserved payouts. Don't wait for success to find you. Take the leap with Crypto Fund Trader today. Visit their website to begin your trading journey with this promising pro firm. There is no better time to start than now. Now, before we start, let me give you some context. Now, my strategy consists of a displacement as a condition, and I believe that is the case for most ICT traders. A displacement is a condition to enter a trade. Now, for some of you who don't know what a displacement is, it is basically like this. So we have some kind of a structure right here, right? And then a sudden move to the upside, right, in case of a bullish scenario. So a sudden move to the upside, right, breaking these recent swings right here, and consists of beefy candles right here. So you will see big candles of this displacement. And then what I want to do is enter when price start retracing. So we have a displacement, and then I would take my trade, my long position, from one of the areas right here of this displacement, and my target would be some kind of a pool of liquidity right here. So maybe equal highs or a swing high or maybe a fair value gap. So we all know that price seek liquidity or balancing an imbalance. That's all what price does, seeking for liquidity or balancing an imbalance. Most of the time, and pretty much all of the time, this displacement right here, this leg of displacement will leave multiple PD arrays. For example, it will leave like a fair value gap right here, right? It can leave a breaker block. You will find also most of the time an order block. So as you can see that there is multiple areas to enter. So you can enter from this fair value gap right here. You can enter from this order block or this breaker. You can either enter from an OTE level. An OTE level is when you pull the fib from this area right here to this swing, and the OTE is this level right here. So the 618, the optimal trade entry. You can even have an inverted fair value gap right here. So an inverted fair value gap is basically when we were on a seller program right here and we had a bearish fair value gap right here. Price when violates that bearish fair value gap, then it might act as a support for price to retrace to it and just continue to the upside. So the real question here is which area to enter from. So if you choose to enter from this fair value gap right here, your stop loss is always here. Whether you are entering from an order block, a breaker or a fair value gap, your stop loss must be on this area right here. Because why? Because this is an validation point. So if price violates this fair value gap and this breaker and this order block, right, and then violates this swing, then most of the time there is a high probability then the price will just keep going down and your stop loss must be here. So back to our subject, if you take the trade from the fair value gap right here, right, then you would have 1.9 R, right? If you enter from this order block, then your TP, then your RR is 4.6. So you can see that this is more than double of the profits. But the controversy here is when you enter from fair value gap, you will rarely miss any trades from fair value gap, but you can see that the profits are not that decent. If you enter from the breaker or the order block, then the profits are good, but out of 4 trades you will miss 3, and missing trades can be harsh. So if you have a good structure, everything is aligned with each other, and you were greedy and you want to enter from here, then price most of the times will retrace to this fair value gap and never hit your order block and just keep going up, and that can cause, I don't know, maybe forcing a trade on the next session. So you are forcing a trade just because you missed a trade earlier. So what I did to fix this problem and to figure out what is the best area to enter from is I went to my trading journal and my previous trades, and I analyzed which area price most of the time retrace to it and then continue up. So I have here a couple of trades from July and from GBP USD and Euro USD. And now let's filter only the winning trades, right? And we have 13 trades. And what I have noticed is the 50% area. Out of 13 trades, as you can see, 12 of them retraced to that 50% area and then continued to the upside. Only one of the trade didn't retrace to that 50% area, and it was slightly, I don't know, like less than a pip, and then continue to the upside. So the 50% area is simply like this. When you pull a fib from this leg right here, from this swing right here to this swing, right, the 50% area is this. So it's called the equilibrium. So price most of the time will retrace to this 50% area, and these are the premium and discount levels. So this right here is called premium, and this is called discount. So most of the time smart money will buy on discount, right, and they will sell from premium. So I noticed that most of the trades, 90% of the trades, retraced to the 50% level right here and then continue up. So you can see that we have a decent profit, 3R compared to 2R here, right? And you won't miss trades when you enter from the 50%. So the 50% level strikes a balance between risk to reward ratio and not missing trades. And if you guys want to look at my trading journal and see for yourself the examples, all you have to do is maybe subscribe to the channel if you want, and DM me on my Twitter account, right? And I'll give you the link to my trading journal and you can check for yourself. I believe this is the end of this video. If you have any questions, DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.